Pretty strong set of results. A lot of it has to do with FICC. What do you see in terms of main drivers going forward?
Yeah, thank you, Francine. Great to be here with you. And yes, it was a very nice set of results this morning that we were privileged to publish. What I liked about the results, Francine, is not just the numbers, but the composition of it. And FICC was an important part, but not the only part. So if you look at the numbers top line, 2.6 billion of profit before tax in sterling. It's about up 16%. Revenues up around 11%, 7.2 billion pounds. An excellent ROTE of 15% across the group. Capital ending where we would like it to be. One of the, a record quarter of performance for the bank and the second biggest for the corporate and investment bank. So all very good. Now, what drives it? And that's the important part. And for us, it's actually been the workings of many, many quarters of building this. And there are two parts I'd like to highlight. The first is the investments which we've made in our business. Whether it's in our credit card portfolios in the US, where we acquired a Gap portfolio of 10 million customers, and whether it is in our markets business, where not just investment in technology and people and fixed income, but also in our trading systems, but also in financing, both in fixed income and in equities prime, which continue to help us in this environment.
So if you look at FICC trading, are you expecting this momentum to go into the second quarter?
So we hope to keep the market share that we have gained with our clients over a number of years to persist. We've broadened and deepened relationships. The actual dollar amount of revenues, of course, goes up and down with volatility in the markets. And that's much, much harder to predict. But what we try to do is to have that capability.
So is this a kind of diversification from the rest when you look at your main drivers going forward?
Well, what we hope is that we have a lot of drivers and that at the right times in the market that they all are there and they click. So, the first quarter of this year was a lot about the bond markets. Interest rates went up and down with the stuff in banking that happened in the US, and I'm sure we'll talk about that. The first quarter a year ago was about equity vol and single stocks. And then our equity business was ready to capture that. So that's how we try to do it, have a full-fledged capability.
So when you look at March was pretty incredible when you look at the banks, starting with the SVB and then Credit Suisse. Does that mean that you had deposits, that people come to you because they were afraid of other banks?
So the UK has been more insulated from that deposit flight across banks than certainly the US has been between the regionals and the big money center banks. Having said that, our deposit franchise grew by about 10 billion pounds during the quarter. And a lot of that was actually corporates putting deposits with us. On the consumer side, it dropped a little, but that seasonality we expect as people pay their income tax bills and draw money from their accounts to do that. So the deposit franchise has behaved extremely well and predictably. But it's also, for us, it's a deposit franchise that we've built over decades, right, with a very nice mixture of individuals, of corporates, small businesses. So.
But do you expect the worst of the banking turmoil to be over? It's unclear. Some people think that there was a banking turmoil in March. Others say, look, it's two specific cases for two specific reasons. How do you see it going forward?
So I think the Credit Suisse was a very specific case. While I think Silicon Valley Bank was a specific case in terms of its circumstances, it has highlighted an issue with some of the regional banks in the US. And that we will see continuing to play out maybe in a small number of names. And we've seen First Republic over the last couple of days. So I expect that we will see over a small number of names. It's not going to be systemic in any way. But there will be repercussions.
And it hasn't changed the way in which Barclays behaves at all. As you said, the UK was pretty immune to that. Are you looking, for example, at possibly buying Credit Suisse assets?
So the UK has been immune from the deposit franchise. Obviously, what's happened in the US and with Credit Suisse affected market volatility, especially in interest rates, and that our trading businesses engage in. Coming back to assets, look, we have built up our business over quarters and years. We have, when Credit Suisse got out of the prime business, we hired a few of their people and some of their clients chose to work with us. So we were happy about that. I think a lot of the asset shifting happened before this period.